Hello everybody, live market rundown for the 8th of September, Friday. Let's get straight into the markets. But actually before we do so, we had a question in the group. Again, get your questions in. The question was about liquidity and how to actually see that the big players have stepped into the markets. So, two things before I answer that question. First thing is, understand that this liquidity plus the reaction is the last part of the strategy. And as I have discussed yesterday, every step in the strategy needs to confirm the previous one. So understand, before we're even looking for liquidity to be taken out and have the reaction which confirms the liquidity, we need to have all the previous steps confirmed. So therefore, you should be a lot more worried or focused on, I should say in a more positive way, about all these other things to be confirmed first, being structure, being price flow, being the area of interest. And after all that has happened, we can look at liquidity being confirmed by the reaction. So that I did want to discuss first. Second part is you need to look at a previous concept, being imbalance. Imbalance is an imbalance in the market, as the word itself says. Imbalance shows that orders out of the ordinary have stepped into the market and thereby moving it in a way that there is an imbalance in the market, which causes price to come back to that level where the big players have stepped in with the huge out of the ordinary orders, size and orders, and creating the balance again. So what we always have with liquidity is a higher high coming down, creating the liquidity, or as we often call it, equal lows for longs or equal highs for shorts. So what happens is they create liquidity or equal lows and they take out the stops, because people think, oh nice, this is support. I just learned on some bullshit channel on YouTube or whatever they found it that people buy, so I'm going to be buying as well. So the big players, they just take you out completely, take the stops, as I have discussed before. In order for them to fill their huge orders of buys, they need a ton of sell orders to come into the market. How do they actually create sell orders in the market? That are the stop orders of retail. When you place a buy order and the stop gets activated, this is actually a sell order. So how do they create a ton of sell orders? They create a ton of stop losses getting taken out. So that is exactly what they do here. They create support, take it out, thereby creating a ton of stop, aka sell orders, and then they buy all those other ones, thereby creating an extraordinary, out of the ordinary amount of buy orders, creating imbalance. So then you'll have imbalance on this leg, put the order there, and then you're coming down. Then you're going up, actually, taking the order. Now for those that are trying to run ahead, you can see that below here I've provided an example of this. We're coming down, bearish structure. Made a low, taken out by a break of structure in the market. Now this move down, as you will see, is quite heavy because it creates imbalance. That's not really what you want to see in a correction. But this gets solved by this move. This fills out all this imbalance. So then it comes down back into our area of interest, as you can see, with the 61.8 fib level, among other things, but let's just keep it clean in terms of the area of interest. But you can see perfect equal lows, actually triple lows. So people are for sure thinking, oh, this is awesome, I'm going to be buying here off support. But then they take it out with this huge wick you can see over here. Huge wick breaks below these levels. So what happens then? The big players step in and they execute orders that are so large that they actually create imbalance. Imbalance is when the wicks are not touching. So you can see right here, this is imbalance left behind. So we use this level of imbalance to put our order stops below that sweep. It gets activated quite aggressively, and then we move towards the other side along with the big players, reaching the fib extension level. Nice 3.48 risk reward, so that is quite good. So basically, let me go over a little bit more quickly. We go up, we come down into our area of interest that gets confirmed by the fact that we have equal lows below, gets taken out, orders get filled of the big players, showing this imbalance. I put the entry on that imbalance because it usually gets filled. As you can see, it did. Comes down a little bit. Doesn't really matter because the stop has been respected. It definitely didn't reach it. And then we go all the way where we need to go towards our fib extension. I hope that was clear. So that is how we actually see that the liquidity has been taken. Liquidity needs to be confirmed by a candlestick formation, being in this case a bullish engulfing that leaves behind imbalance that is indicated by the wicks not touching. So that is that. Gone it is. Let's get into the actual setups right now. First off, we have gold. So gold 4 hour is bullish. It is correcting still. We're not really seeing what we need to see, being the things I've just discussed is still very slow. So we can actually expect another level to be going down. Fighter jet flying across. In Singapore, they're actually always flexing their military muscles over this tiny little island, but it is what it is. So what I could see now, we might actually fill this imbalance, come up, tap this, and that's when we'll be able to take the sells. Not 1 hour sells, but 15-minute sells, because we are trading against a 4 hour structure. So therefore, I don't want to be selling on the 1 hour because that would be trading against the one above. I want to be selling on the 15-minute in line with the one above. For the 15-minute, that is the 1 hour. Euro JPY, same stuff basically. 4 hour bullish correcting. Not really too interesting right now. Yeah, not that great, so I'm expecting lower prices again, because this is also not, this is definitely an impulse, this is definitely a correction still, so we'll have to see what happens, and then we might be able to get some 15-minute sells in. GBP CAD broke the structure, going down, reverse actually, because a 4 hour is bearishly correcting, so that means the 1 hour is bullishly going. Impulse correction down. We are creating some liquidity right now, which might be interesting. So we'll see how this reacts. If this does what we have just discussed, being taken it out, followed and confirmed by an engulfing close that leaves behind liquidity, we can start buying on the 15-minute. USD JPY, the 4 hour has come up quite high, broke 1 hour structure there by confirming the 4 hour higher high. So the 1 hour is now moving down and correcting up. So let's see how that goes. We have this beautiful level of daily imbalance, which could potentially be the 4 hour higher low point that we could be buying from into, where did it go? Yeah, it's not on the chart right now, but let's actually put it on there. The daily fib extension that is just still above. So there we go. Clean it up. So yeah, 4 hour would be nice to buy into this fib extension. So we'll see if that happens. The actual watch list that is very relevant at this very moment is Australian dollar, US dollar on a 4 hour. We have confirmed the 4 hour lower low with a 1 hour break of structure. So as you know, what we can do is not buy on the 1 hour because I'll be going against the 4 hour, which I expect to make a lower high to go down. So we can zoom into the 15-minute and buy on the 15-minute. Very huge engulfing, very huge impulse. Now correcting down. Beautiful level of imbalance left behind here on the 1 hour. So I'm expecting this to be filled, and then we'll be buying on the 15-minute. Very similar setup. on New Zealand dollar, US dollar. The last one was Australian dollar, US dollar. So this is New Zealand dollar, US dollar. So obviously it's going to be quite similar. The 15-minute is correcting down. Would love to be able to buy into the 1 hour fib extension. So I'll keep you guys updated on those. I hope you understood what I was explaining in terms of the liquidity being confirmed with the candlestick formation and the order being placed on the imbalance of the candlestick formation. If it is not clear, let me know. I'll get more into detail on that one. But until then, best of luck in the markets.